Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video, I'm going to share with you guys 7 companies that have been on fire this year. Some of them are up about 40%, 50%, all the way to some of them almost 100%. Now, I'm not saying these companies are buy right now. In fact, some of them are trading at expensive levels. But these are the type of high quality businesses that you want to keep on your watch list for for the next pullback if that happens in the next few months. And it's genuinely important to have a watch list. I've always said to you guys, one of the things that I've done over the last couple of years that worked for me is the fact that I have my watch list. I add all the companies that I want to buy or potentially add to the portfolio and so on. I put my price targets and I leave them alone. Then I set that on trading 212 because it allows you to set, for example, if you wanted to do that, you can just click this thing here and decide what price you want to buy this company, and then you get alert every time that company hits that price level. And it's important to do that because it kind of gives you a discipline, and this is what I've said over the years, and I genuinely believe it worked for me a lot. Because there was times where companies like Eli Lilly and Nvidia's and so on were on my watch list, but I couldn't touch them because I knew they were too expensive. Then in April they pulled back a lot, and I added them to the portfolio because they got to the point where I thought right now they were basically below, they're trading below their intrinsic values and so on. So it is important to have a process, and that will work for you because the next crash comes and you don't have anything on your watch list. You're just going to buy everything, or you either end up selling just like everybody else in April. In April, the amount of messages that I've got from brothers and sisters asking, this is my situation, what do I do? I'm up about 10%, 15%. I was up about, I think, £15,000, and I went in the negative at some point, and then it bounced back, and right now we're up about 17%, almost to 15%. So it does happen, but it is what it is. Now, if you would like to support the channel, of course, don't forget to join us in the Patreon account where you get access to a lot of things, a lot of the, the family portfolios, all the buys and sales that I make, the regular stock watch lists that I've made recently for the community, the weekly sort of individual stocks and so on. So there's a lot that you can get your hands on, inshallah, if you can join us. And now I'm going to share with you guys the 7 companies. What I'm going to do is first, I'm going to give you a little bit of information about each one of the companies. And then, of course, we will look at the valuation side of it because that's the most important thing. Of course, we're going to look at the revenue side of things, but it's also important. The valuation side is the most important because some of these companies are very, very expensive right now, like I said. So the first one we're looking at today is Broadcom. Broadcom is actually, if we go on here and we look at the year to date, for example, is up 60%. Broadcom has quietly become one of the biggest semiconductors and basically infrastructure software companies in the world right now. This company was in my portfolio for the last 5 years, and as you've seen over the years, I've shared it with you guys. This is probably one of the best companies I've invested in. There was a time, and I'll show you in a second. There was a time I was buying this company, but nobody else was talking about it. I'm not saying I'm genius, but I realized it was a great company. I liked the product, and the company was trading under their intrinsic values. And now they are up a lot because of the AI related demand, networking chips, and their VMware acquisitions. So they bought VMware, which now gives this company, two sides of things. So for example, they've got the software side of things, and they've got the semiconductor side of things, which is the hardware. So it is really in a great place right now. And as you can see, according to Wall Street, is actually strong buy. If I quickly show you, 36 strong buys, 7 buys and 3 holds right now based on their current valuation. Okay, just 5% upside from where we are. If we look at the fast graph, for example, this in 2020, this is where I was buying the company. So the orange line here is the earnings, also over 15 PE kind of thing. Okay, so that's basically what we want to see is the price, which is this line here, that black line, to be under that orange line. That means the stock's undervalued. So in 2020, when I was buying this, it was actually paying excellent dividend. As you can see, that gold line is the dividends here, and this blue line is the basically the PE, the normal PE, if you like, which the market likes to trade. So based on you saw it had a very low PE, and it was paying excellent dividend, and it was undervalued. So it was an amazing combination. I think the dividends was about 3% at that point. So I was buying it at that time, and then something happened in 2023. It's gone up a little bit, and then in 2024, that's when the AI madness, took over and completely went up so much. And then in April, we got a chance again, okay, to buy this company at $169 per share at 30 PE, and then it's gone up again. So right now we're here. Even now, according to FastGraph, because of these 40 earnings expectations, it is still undervalued. So if you bought this stock right now, at the end of 2027, you'll make about $1,000 on the top of the $10,000 that you've invested. So it is interesting, the fact that, according to this, is actually seems undervalued at this point in time, and is about 2% up, basically downside from where we are right now. So if it goes down 2-3%, potentially this is still a buy according to the valuation that we are looking at, and that valuation is this part here. The expected growth for the next year for EPS, earnings per share, and revenue is 38 and 35, which is quite high. By the way, at the end of the video, I'm going to compare all these companies with their total returns over the last 5 to 10 years. We'll see where they have been over the last 5 years as well. So as you can see, it's a great company, seems undervalued at this point in time. So we will see where things go from here. The next one I'm going to share with you guys is NVIDIA. NVIDIA is done absolutely amazing job. And as you know, everybody's talking about NVIDIA. They have the hardware, they have the software, they've got everything. And one of the things I really like about this company, NVIDIA, is the fact that the owner, the CEO, is basically the company, the guy who started the business. And for me, that's really important. The Metas and so on, these companies are run by the people who actually started this whole business. And I really like that. And as you can see, it's a strong buy right now. Year to date, what are we up? Almost to 50%. For the 1 year, 43%. In the last 5 years, 1,500. So if I had bought 5 years ago, and I actually did and sell at that at some point, okay, I shouldn't have sold it, but of course, who knew? And the Wall Street is actually saying 49 strong buys, 10 buys, 4 holds, and 1 sell. And if you look at this, about 9% upside from where we are, $219 per share, so I don't think the price should be. Right now, it's basically overvalued about 5% according to Morningstar valuation. I've always said to you guys, Morningstar valuation, I do like it. So maybe even if you give yourself another 5% on top of that, that would give yourself 10%. If it goes down 10%, it potentially is a buy again. Now, if we look at FastGraph, for example, look at that. Look at the earnings from 2023 because of AI. How much the earnings are growing every single year for basically for the next couple of years. And if you bought this stock right now and held it for basically until the January 2028, and you've got 10,000 of this stock, you will be making about 38% on top of your money. So about 13,868. Basically, that is what you will have. So it is really interesting, the fact that it is still undervalued. But if we use that's basically using the normal. So if we go to forecast, for example, and that's based on the estimates, okay. And if we use the normal multiple, which is basically what basically Mr. Market likes to trade this company, that 48 PE, for example, which I wouldn't be surprised if this company trades, is basically you will be making about 70-80% on top of your money. So again, even though this company has gone up so much, it doesn't seem too expensive right now, which is interesting. So if we were to see market correction, and correction is basically anything about 10% or more, then potentially this company will become a buy again. So let's go back again and have a look at the earnings side of things. So you'll see the reason why people are very bullish on this company. 50% January of 2026. So basically the year coming in January, in a couple of months down the line when they report their full earnings, is about 50%. But next year, 2027, which is what we're using, that 43%. Then you've got 20%, 5%. But there's only 3 analysts looking at this. So I normally focus on the first 3 because there's a lot of analysts looking at this, and that gives you the average if you like. And the fact that they're everywhere these days, from the data center to AI models to GPUs and everything else, this company has become one of the most important companies in the world right now. Again, if we are in a bubble, then they're part of that huge bubble, and you will get a massive opportunity. And the next one is AMD. AMD continues to close the gap with Intel. Not even close the gap. They've already closed that gap. They're challenging Nvidia, if you like, with the AI chips and so on. Their data centers, the AI accelerated business is growing fast, and they are built to as a strong ecosystem as well. At the moment is quite volatile companies, similar to Nvidia's and so on. But as you can see, it's about 19% overvalued at this point in time. Of course, it's not as big as these two, because this one is a 1.7 trillion company. We're looking at 4.8 trillion, and AMD is now we're looking about just for 400, which is decent. It's a huge company, but 19% overvalued at this point in time. But look at that growth. The growth that basically expected to about almost 60% and 27% basically just next year. And now looking at year to date, 113%. 113% since January, which is absolutely ridiculous if you think about it. Wall Street is actually saying 33 strong buys, 5 buys, 14 holds. And if we look at the earnings expectations moving forward, this is what we're using, because December 2026, so December 2025 is just around the corner. So in the next 3 years, they expect it to grow, 45%, 50 something percent. And with revenue side of things, 27%, 35% and so on, is absolutely ridiculous. Now, if we look at Fast Graph and see where this company is just historically, as you can see over the last even 2018, 2019, the company was still sort of undervalued at some point, and they didn't even have earnings in 2014, 2015 and so on. And then it slowly started growing, but right now, based on this, it just looks overvalued. Let's use the forecaster. So if we use in the estimates 80% upside from where we are, wow, that's interesting. So if you bought this stock right now, using that, what is the PE here? Let me have a look again, because I think that's about 50 PE. But if we use the normal multiple for this one, it's 53. So there's basically both ways. It doesn't make any difference. They are more or less the same. They're expecting to grow. If you invested 10,000, you'll have 19,000 by the end of 2027. If you look at the estimates, more or less exactly the same. If you invested 10,000, you'll have 18,000 according to Fast Graph, and that's very interesting, because it's just overvalued at this point in time, about 19%. But if you bought it now, according to this, you potentially will be making some money. I personally wouldn't touch it. I do own it. Have had it for basically a few years now. In the family portfolio, I think I'm over 100 and something percent up right now. I think last time I checked it was 180% or something like that. But it is an interesting company. I really like the business model. I like Sue, the CEO of the company. She's really, really good. And the crazy part is the two people that run these two business companies are actually cousins, but they sort of a distant cousins. They don't really have anything to do with each other, but they are cousins, and they run the companies that they started, which is quite nice. So next one is Salam Research, and as you can see here, it's about 36% overvalued at this point in time. The valuation is not the best the expectation moving forward, and in comparison to the rest of the companies that we talked about today, they're not growing as fast as these other companies. And if we look at for the 1 year, for a year to date, is 115%. So this is another one that has done absolutely amazing. Is part of the semiconductor companies. So far, the 4 that we've seen, they're all semiconductor companies. So we will see mixture of other companies as well in a second. And if we look at Wall Street, it's actually 21 strong buys, 2 buys, 10 holds, and 1 sell. And as you can see, about 1% upside from where we currently are. If we then look at Fast Graph, as you can see straight away, that's the price. This is where the company should be, but that's where the price is. It just looks overvalued. It just looks wrong, that whole graph. So if we use that 15 PE, of course, we're not going to make any money. We're losing about almost 40%. If we use the normal multiple, which is what basically the market likes to trade this company, you're still losing some money. So this one is ridiculously expensive. So I actually wouldn't touch it right now. The next one is Arista Networks, and this is a company that has been on my watch list for quite some time, but I never get the chance. About 23% up overvalued at this point in time. Growth expectation is decent, very profitable business, unlike AMD and so on. They're very profitable business so far. And if you don't know anything about the company, they design and high performance networking equipment, basically the backbone of a modern data centers and so on, and cloud computing. So yeah, they benefit directly from the AI boom because of AI workloads and need basically faster, more efficient networks and so on. And because of that, the stock has gone up so much. So if we go in here now and see if we can find ANET, let's have a look for the 1 year. 41% up for this year, which is absolutely crazy. And if we look at the Wall Street expectation, 18 strong buys, 5 buys, 4 holds and 1 sell, and as you can see, about 1% upside from where we currently are. And if we look at fast growth as well, and if we go back historically, as you can see, the company's been undervalued for quite some time up until 2023. Then things are gone crazy. It came back down again in April. It was undervalued at some point, and then it's gone up again. So let's have a look at the forecast moving forward. Normal PE of 20, you'll be losing almost 50% of your money. If if you use the normal multiple, which is what the market likes to trade this company, you will lose about 8 to 9%. So again, another one that's basically overvalued at this point in time. We got 2 more. If you haven't liked the video, please like the video, subscribe to the channel, of course, if you haven't already, and join us in the Patreon account if you can. AppLovin is another one. Might not be as well well known, but it's quietly becoming a powerful and powerhouse in the mobile app and monetization side of things, and AI driven and technology and so on. Their new AI engine and has transformed their business model, driving massive profitability and so on. So another great one that is sort of quietly doing what it needs to do. Let's have a look at how much it's up, because that's one of the reasons why I've included it here, is the fact that it's a high quality business and is up a lot this year. 93%. So it's done really well. According to Wall Street, 16 buys, 6 buys, strong buys, 6 buys, and then 3 holds, 1 sell, 1 strong sell. So 3.5% upside from where we are. $648 per share is where they think the price should be. If we go on here and look for this company and we just look at it historically, as you can see, they haven't had no earnings up until 2022, 2023. And then since then, they've been doing absolutely amazing job. As you can see here from this graph, you will actually be making more money if you actually bought this stock right now, according to this. But let's go on the forecast, and so I can tell you. So estimates. So we're looking at this 51% and 35%, right? And then if you use that and just draw the graph from here to there, for example, you will be making about 33%. So your 10,000 will become 13,500. So according to this one, is actually not overvalued. If you use the normal multiple, also equally, it's not. So 68% upside from where we are. So 16,863 is what you will have. But it is an interesting one. So right now, according to this, it is actually really overvalued, 43%. According to Wall Street, is not that much. According to Fastgraph, it basically still undervalued. So I would not touch it, I'll promise you. Okay, this is one of the reasons I like Morningstar valuation. Okay, because their discount cash flow models that they use, I trust that. Okay, the next one is CrowdStrike. And finally, this is one of my favorite cybersecurity names. They continue to dominate the endpoint protection and expanding into identity and cloud security side of things. Cybersecurity is one of those sectors that will only grow in important over the next basically decade. Every single company that's coming up with AI and so on, they need some protection. They need to protect their data. So CrowdStrike is in that sort of environment. I really like the business model. I've had it, in the portfolio for quite some time. Took some profit off the table. That was about 3-4 years ago, and then since then it's been going up and up. And I think when I sold it was about $100-something per share. Right now we're looking at about over 500. And the reason I sold these companies, by the way, is not because they were bad companies. Is because at the time of sometimes it's because of the portfolio situation. I might have too many technology companies, whatever the reason was. Anyway, 60% up since the beginning of the year, which is absolutely amazing. And then we've got 14 strong, 24 strong buys, 9 buys, 18 holds, and 1 strong sell. And as you can see right now, if you bought this stock, it basically you will be losing about 7%. Now, if we go to fast graph and do the same thing that we've done with the rest of the companies, so historically, as you can see, wow, that is genuinely terrible. But let's just click the forecast. You will be losing a lot of money if you bought this stock right now. Even if we use the normal multiple, which is 155 PE, but that grows about 30% here, 30% there, you'll be making 7,000, almost to seven. Your 10,000 becomes $17,595. But I don't believe it. I genuinely don't think it is that basically cheap right now. It is a still expensive stock in my opinion. 40% downside is not great at all. But these are the type of businesses you want to add to your watch list. Leave them alone and have you be disciplined. Buy them when they dip, and that's it. So I did that with AMD. I've had this one for a long time. I did that with AMD. I did that with Nvidia. I did that with Lam Research. Lam Research was in the actual family portfolio as well. Arista, I've never owned it. I would love to own this one, but it's still expensive. AppLovin, I'm not too sure. I want to, but CrowdStrike is the one I would love to, but it's too expensive as well. So you have to be disciplined. You have to just hold back when you need to. Let me just quickly show you before we stop the Shariah-compliant side of things. And as you can see, pause the video and you can have a look at that. But these are the type of businesses that you want to add to your portfolios in the long run, inshallah. And just to be transparent, as you can see, Broadcom is my biggest winner here, 667% up since I bought the company. The stock, if you like, Nvidia, since April, I'm up 96%. I wish I bought more at that point, but I did not want to, because it's the fact that it's a very volatile stock. I didn't want to add it. And AMD, if you want to know how many shares I own and so on, join us in the Patreon account where you get access to the family portfolio, and you will see how many shares of that company that I own and so on. I hope you enjoy this type of content. If you are, share with your family and friends. Of course, all I'm trying to do here is just help the community. So if you can help me, that would be absolutely amazing. Have a wonderful day. Assalamu Alaikum.